about volume weighted average price and what I would be anchoring your price to today. But this is VWAP, and we'll dig a little bit into that. Little bit of a move yesterday, right? Nice little green candle took us above 194 very, very quickly. Nvidia hovering up at that 196 level. We talked about this yesterday. A lot of movement and a lot of open interest on that 200 call. Look, people buying at the 180 level, selling at the 200 level, and foolish retail gamblers buying the 200 and are about to get smashed this morning, most likely because of implied volatility crush. Now, we are here watching this market go. Get out of my office, please. Talking to my dog, just staring at me. That's not good. That means something happened in the house that I don't know about yet. Good morning, Doji. Good morning, Putman. Good morning, Smokey. Good morning, Lyndon, Randy, Taltex, Eric in Northport, wherever you are. I have not seen Charlie yet. Somebody get him out of bed. Make sure he is okay. We'll talk a little bit about NVIDIA. Again, you're with us today because, look, we just had a massive earnings move on NVIDIA. We're up this morning. We've rallied. We've pushed up into the 196 level. The SPY is waking back up. The S&P 500, the SPY pushing back above, oh my Lord, pushing back above that exponential moving average. Is this the worst over? Well, we're going to talk about that. There is very good reason to expect, as I noted, this might not be a pure momentum event, but it can be just enough to get us back to a squeeze into the 680, 685 range. Why? Doesn't take a lot of positive news to take us from where we were 48 hours ago, where we had one stock in a positive momentum breakout environment. Positive intersection this morning, we've seen a huge decline in selling. And this is important because on the intraday side, we're seeing capital actually coming back into a number of names. Now, obviously, those are the stocks that are going to align. There's Charlie. We were worried about you. We're focusing again on the stocks that align with NVIDIA, the Palantirs of the world, capital flowing back in. Let's take a real quick look just to assess where money's moving this morning. What are people buying? Why is everybody excited? What's getting people out of bed? What are they covering? Well, on a technical side, we just look at the number of stocks that are up on the month. That is very important because this is not knee-jerk reaction. This is hopefully a continuation of buying and momentum in the market. We will look at the week. We'll go to +5. And we will see 12 names go to the beta over 1 to 2. Nice little clean number. We're at 10. Well, what is linked very closely to NVIDIA? We went through this yesterday. Everything except for Albemarle and Warner Brothers. PWR, Pod, I believe Pod, yeah, Engineer. Nope. So 3, Pod, medical devices. So no. So AMAT, Broadcom, CEG, Constellation, GEV, Genova, both Google's and PWR. So obviously closely linked to the continuation of momentum in NVIDIA. Hey, you never know. We don't know what time he sleeps. Maybe, who knows? We don't know. We are still red. But let me just point this out very quickly. In this environment, it doesn't take a lot of optimism when markets were down in this territory where there was nothing breaking out. It's speculative. It's a speculative element. And we're going to talk about the good, the bad, and the what the from the NVIDIA report. But I do just want to point out very quickly, it doesn't take a lot to squeeze this market higher. And I go back and I remind you of 2022. This is where my head is right now as I start to formulate a outlook for 2026. I have to start writing that stuff soon. I have to start thinking about where is this market going to be in 9 to 12 months. And my full expectation remains the Fed will still be accommodative. And I still think we have some time on the capital structure to continue to push equities higher. But when this rolls over, it does not go lower highs, lower lows in a straight down pattern. It is basically a stair step down. And I continually go back to these periods of time where we saw last in that August of that year a squeeze to overbought levels. We saw in April extraordinarily close to squeezes back toward RSI, MFI in near overbought territory. And those peaks become the start of another leg down. And as we've been seeing in this environment, we are seeing a situation where we have these drops, we have a pop, we have a drop, we have a pop. Based on the news, no reason that this can continue. My point is, though, the underlying issues in the capital markets, the underlying issues in repo, the underlying issues in the reserves, they're still all going to be there. So you could get a move to 680 pretty quickly. And then what happens? Funds sell back into that pressure. It's more of us than there's more of them than there are of us in terms of the amount of capital and the amount of equities that they're holding. And if the risk off behavior that we've been talking about is still persistent, it's not going to simply be, hey, we're going to wake up in December and we're 590. It's not usually how it works. It is a process, and they are de-risking, and we will continue to monitor that as we go. Now, I'm going to just pour through this. I don't have a guest today. I also don't have half of a deck because it's very hard to do a lot of this every single morning. It is a lot of work pulling all of this information together. But that said, the key thing that we're watching that is not NVIDIA related is Walmart. Walmart had a nice little report. Yeah. And this is an interesting reset, interesting situation that we're in because everybody's going to be hung up on NVIDIA. And I'm going to tell you right now, NVIDIA is probably one of the two things I'm trading today. That's probably going to be it. It's going to be the Qs and NVIDIA. But here's what's interesting about the broader story, because you have to stay on top of this stuff. Well, Home Depot just got beaten. And Home Depot is at lows that we have not seen since April, which was in the center of a trade crisis. So they cut their full year guidance. Their statement, big tickets purchases are slowing. That's very significant. Lowe's, meanwhile, which again, I argue is probably just two guys who were high school rivals who had the same idea, opened the exact same store, painted it their own school colors, and they have been fighting for 30 years because they're still debating who won a Thanksgiving football game that ended in a tie. There's no difference between these two companies. It drives me absolutely crazy. It's just one more credit card that I didn't need. Lowe's beats on EPS, but warns of flat comps and cautious outlook. Hey, look, the consumers are not buying washing machines. Housing turnover, fewer storm repairs, weak demand for do-it-yourself. And the contractor pro spending is stronger than consumers. But the question is, are the contractors going to be doing the work in the homes? There is a shift away from discretionary retail tied to housing at the moment. You can obviously see that in the chart. XLY, XRT, Low, and HD remain in focus. But Walmart, however, after a lot of bad news, a lot of people have been down on Walmart, and here you are. I mean, this is a stock that I was buying in the 60s. This is the most important retail report of the quarter, and Walmart reports, as expected, 4.7% revenue growth. Who cares? Well, it matters because the key signpost for this, remember, the S&P 500 is owned primarily by the top 10% of Americans. About 49% of consumer spending is done by the top 10% in income in the United States. But the signposts have to be very clear on the lower income consumer, on the e-commerce margins, on the tariff impact, on holiday spending. And the guidance tone, right, is really built around the consumer stress test that is holiday spending and inflation sensitivity. So a strong Walmart print can help give a little bit of support after, stronger revenue above estimates. That can give some relief to the lows of the world after these big moves down. Big moves down. Big down moves. Don't listen to me. It's still before 9 o'clock. You're not supposed to teach anything economical. I don't even think that's a word before 9 o'clock. Economics related. Okay. Finally, repo. Look, this isn't going away. And we're going to get to the celebration, if you will, in just a minute. And then we're going to do the runner at 9:10, Charlie. I apologize. But look, the repo hadn't been a whole lot going on, but it's still sending the warnings out there. The SOFR has traded near and above the Fed funds rate. We've seen that. The Fed is quietly increasing. It's been happening over the last couple of weeks, and the buy the dippers have not been buying the dips until they are given a real justification. Now, NVIDIA today, and I am going to connect this really to that 194.32 level. And that came in at 16.40.21, 421 yesterday. Once again, for everybody in the back, you can, and yes, you should, be able to access VWAP through thinkorswim. We have a setup. It should still be open on my computer, and if it is not, then I might just walk into the woods. It is not there. However, I did share yesterday. I did share in the chat. Let me find it. I'm going to find it because I know it's here because I did it yesterday. I gave the link, the shared link for volume weighted average price for thinkorswim. There it is. I have it. I put it there at 3:56 yesterday. There you are. Boom. Don't say I don't care. Volume weighted average price is an anchor. Yes, 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 yes. So, volume weighted average price means the average price traded today. Pretty simple. Weighted by volume on the 1 minute. For NVIDIA, VWAP matters more than most stocks because, well, VWAP is where the real money trades. NVIDIA is the primary execution target for institutions and passive investment funds. 1,700 ETFs own this stock. Institutions lever up on this stock. This is the key thing that I keep talking about. It has deep options liquidity, so hedgers will use VWAP to balance deltas. It will attract large algorithmic orders, which are benchmarked to, you got it, right back to VWAP. So when NVIDIA stretches far above or far below a VWAP, institutions become reluctant buyers and more willing sellers. And when it trades below VWAP, algorithms become reluctant sellers and more willing buyers. This creates reversion setups, which is what we're always looking for, especially on heavy news days like, hey, today. So anchored VWAP is the same concept, except you actually get to choose the starting point. So what does that mean? Well, after earnings, NVIDIA often consolidates or it will revert to an anchored VWAP from that day as the hype fades and the institutions clean up their order flow. So if I'm starting the day, I have VWAP set up. I have my Bollinger Bands always looking for that move outside the bands where algos will step in and make bids. And I'll anchor it to, really quickly, I'll do it to yesterday at 16.21. So that first initial reaction, that draws a unique line in the sand for this morning because this kind of becomes a core support level for the day. 194.80. We may see this bounce off this level multiple times. And as you can see, we've gotten close. We had one little tick here coming in the early morning, 5:09. What we'll likely do, though, is when the market opens, whatever direction we move, that first move, that first action, that can and will be a nice place to start today, especially if we gap up. You can anchor it to major breakouts. So if NVIDIA clears a important range and the anchored VWAP from that breakout is the institutional cost basis funds will defend a key level, anchor it to larger sell-offs. If there are panic acts, we're not going to see that most likely today. And of course, we also anchor it to market-wide liquidity events, which is why I will, when we have these types of big moves down, yes, I got that right. It's a weird way to frame the English language. When we move down like this is where I will anchor it to, this recent low when everybody's kind of mass panic and we have these squeezes. It's a reminder. There's that 180 level, which actually brought us back up to 192. So this becomes a key line in the sand for today. We will have a second line that will be based on the first move, and we will look at where if it might even trade between a range today between these two. So we have that anchored set up, and we're ready to roll. But let me walk you through real quick what the heck happened yesterday. And there's your runner numbers, and we're going to get to them in a couple minutes. We're just going to change it today. We're going to be okay. The runner delayed. I like that. Okay. Real quick. This is, we did this live yesterday, and I went through the financial results, and Matt and I were going through it, and I found a couple of things that I said, oh, wow, this looks great. It looks great. This looks great. And then I read it. And then when you read it, you go, oh, that's okay. This is something. So record revenues, 57 billion, crushing the whisper number, up 22% quarter over quarter, 62% year over year. No doubt about it. Data centers, the massive bulk of the business. 51.2 billion out of 57 billion in revenue. Okay, so that means their video game division isn't doing anything. It just means they're all in on AI, which is fine. The GAAP gross margin hit 73.4% with guidance near 75 next quarter. And why does that matter? It matters because the market expects better margins every single time. So they've got to outdo themselves. NVIDIA sells the critical commodity of AI compute into a global infrastructure build-out. And I had a conversation yesterday with a very good friend of mine, somebody that I trust deeply on the AI front, given that he is building our AI data centers up in Scandinavia. And I said, do you think this is an infrastructure bubble? And he kind of laughed and he said, they haven't even built anything yet. And it's kind of true. We're not in a railroad situation. But I will note this, everyone in the world, everywhere, at all times together, are suddenly going to become experts in infrastructure bubbles. Look for those articles. They're going to be coming. They're going to come fast, and they're going to come furious. I simply just note, yes, it most likely will get to that point, and we can talk about how and when that stuff starts to unwind. The language, though, is a little concerning. We'll talk about that in a moment. Here's the red flag. The red flag is that inventory doubled from year end from about 10 billion to 20 billion. That's stuff they have not moved off their balance sheet. It counts as an asset right now. But if AMD comes out with the next greatest thing, or you get another DeepSeek moment, then all of a sudden those assets, that inventory may need to be discounted. Accounts receivable plus inventory now sits above $50 billion, which is a monstrous heavy working capital use. AI end users have not yet proven broad, durable monetization of AI applications. That's the other big thing, right? So they're building all this stuff up. How are they showing profitability? Does that become comparable to what Mr. Zuckerberg did with the metaverse? They wanted to build the metaverse, but how are you actually going to turn it into anything? That was a critical question. And the valuations assume years of continued high growth and margins with little room for error, which brings us to the CEO. I've gone through a lot of CEO statements in my lifetime. I've consulted for them. I've read their statements. I've gone to countless meetings, post-earnings meetings and conference calls. The chatter in this statement, this is rare territory for a CEO. This is a guy high on his supply. CEOs say computing demand keeps accelerating and compounding, with trading and inference each growing exponentially. And what he is effectively arguing is that there is no limit to the demand. We claims we've entered a virtuous cycle of AI and that the AI ecosystem is scaling fast across more industries and countries. He describes AI as, quote, going everywhere, doing everything all at once. That is a hell of a statement. Doesn't mean that he's necessarily wrong at the moment. The one thing about the infrastructure build out when it comes to AI is that it doesn't take any time. You just need the infrastructure. You just need the building itself. There's not much else. As far as the user goes, there's not a situation where, the internet, for example, took 15 years to build out before the real benefits were there. The the steam engine took 70 years to be widely adopted. Coinage took 200 years. Those types of things are very powerful, but they're not fast. AI is powerful and fast at the same time, which is why you got to give it a little bit more runway. But that said, the guidance implied unstoppable demand even as credit tightens and regulation, export controls, and macro risks build. So we get through this quarter, we get through the next couple of months, and then we're going to do this all over again. And at some point, I don't know if it'll be 3 months from now or 24 months from now, but it's going to hit a wall. It has to hit a wall. All of these things do. And there really is no deep, long-term thing that I can compare this to suggest, look, you've got this runway. It's going to continue. NVIDIA's got it. But at some point, they're going to hit a wall. And you will hear about AI bubble. You will hear about infrastructure bubble. The key thing that matters is the price. If the stock is above its 50 and its 20-day moving average and the momentum continues and the central bank is accommodative, remember, I've gone through this over the last week. Very high capital efficient business, very strong collateral quality. Again, those big leverage funds, they don't care about NVIDIA's numbers. They care about the fact that they are quality collateral right now. And then again, 1,700 ETFs own this stock. So the flows will tell you the truth. And then we will start to have these periods of time, particularly around their earnings reports, where we're going to get a lot of chatter. And this type of movement ahead and behind the earnings for the last 2 to 3 weeks, expect this to be pretty common. Not the norm, but common in the future. Let's do it. Let's do it. Tall Tex, Tim, the runner. You know it. All right. This is pretty easy. Amazon, hello. After all that panic and all that whining and all that fear, I look at it and I say, yeah, we're gonna turn a corner here. Everything, every single chart, no matter where you are, 15, 30, hourly, daily, and really weekly, is saying, I want to be a contrarian bet to the upside. So do it. I think that, we saw this period of lower highs, lower lows. We had come off of this kind of stair step pattern up for 2 weeks. I'm giving this 2 weeks. I'm giving this market permission for a solid 2 to 3 weeks to, get euphoric again and have everybody say, hey, we're in a situation right now where everybody's excited. I noted this 2 things. One, the insider buying is the strongest in this market in 6 months. And it is a contrarian thing. So what does well when the insiders pick up buying? And what does better when the leverage starts to return? Well, it's all of those big mega cap stocks. But I like the fact that this is kind of every technical trader ever who is going with the basics on the 820, the 850. Here's your insider buying to selling over 6 months. I mean, look, I'm just saying, you're at the highest level that we've seen insider buying to selling ratios and highest on dollar amount, dollar for dollar ratio, not dollar for dollar ratio. So they're coming off the sidelines. They're buying up stocks. And I put together a piece this morning on insider buying. It was the largest number of insider purchases that I have seen in months. You have a lot going on here, including things like the CEO of Blue Owl Capital Corp buying his own stock. That suggests to me that the credit concerns are going to alleviate for a little bit of time, which brings me back to the mega caps. So, all right, what can I do here? How can I focus on this? I like going out a week, really, in this environment, particularly on Amazon, and just doing a spread because you've got all of these different support levels. So, specifically, what I'm looking at, stocks at 227.07. I'm going to probably go into next Friday with the 225 and buy and sell the what's going on? There we go. And selling the 230. So next 28th, and I'm going to probably get out of this faster, by the way. I'm not going to stick around very much for Black Friday when it comes to trying to force anything. But this is a pretty straight down the middle trade when you look at this and you set up the probability of profit. Again, the next Friday's 225, the following week, or forgive me, buying the 225, selling the 230. This is a call spread. It's about $190. Should be in that range, $200 to make about 300. Max return on risk is about 150%. Probability of profit about 50. It's a one-directional bet with a tight stop. And my tight stop is going to probably be back around, let me take a look here, just in case this rolls back over. 222. Yeah, there you go. 222. All right. Liberty. I had a really good conversation last night with Josh Bellinger. He's like, what the? He sent an email out. He's like, what? I said, Josh, do you know what Liberty is? And he said, yeah, it's a fracking company. I said, no, this is Chris Wright's company. And he just goes, oh. And then I just saw like the gears on this guy's head just completely just start going. And he's like, oh, there's news coming. Huge speculation on call options on Liberty Energy. What is Liberty Energy? Chris Wright's company. Who's Chris Wright? The Department of Energy head. Massive call buying. And what's interesting about this? Well, I said to him, I'm probably going to sell put spreads on it. And he says, well, it's pretty funny that the guy who knows what's going on is being the most conservative about it. But it's true. Like, I think if you're going to look at this and see, I don't believe in coincidence at all when it comes to this administration. I just don't, and I don't care. I'm just going to state, it's pretty open when it comes to, hey, this is what we're doing with crypto. Everybody front run it. We saw this happen back in April. We've seen a lot of movement. We've seen a lot of just, unusual activity. The guy who made like $1 billion trading the TQQQ on April 8th. This is the type of stuff that's going on, and it's all out in the open, and Congress is buying stuff ahead of policy things as well. This is not, in some ways, I'm kind of glad that it's just out in the open, because at least we're going to have an honest conversation about it. And if we could see it in the pricing and we could see it in the markets, then cool. All right. So Liberty Energy, this company is involved in geothermal. They're involved in fracking. There could be a major announcement again with offshoring. We just saw that with California, some sort of policy change. So what would we be looking for? Remember the other guy who made like $1 billion shorting Bitcoin, like right ahead of an announcement? This is what we're talking about. So if I can do a LBRT trade and I can actually find something that is liquid, I might just buy the stock, to be honest, and see if we can get back to that $19 level. But I would prefer if I can find some sort of short-term option trade. It might be something as simple as selling the 16 and buying the 15 in December, seeing if I can find a little bit more, possibly even going all the way out to March. I know that's a long time, but the reality is this is the CEO who became the Treasury Secretary, who's literally like got his hands in everything. Liberty is in everything. So even if it's something as simple as selling the 14, or even the 15 for March and buying the 13, why not? So Liberty, KVYO. I don't know what that is. I don't even want to tell you what that sounds like. What are you? Technology. Okay, so again, all this technology software stuff that has been beaten up. Strength creates strength. We can move back above this key line. A little bit of a pop this morning. Kind of the same story. Just looking for short duration, buying something at the money, selling out of the money, keeping a tight buffer. This coming off. All right, EOG, Kava, and LOW. I'm actually going to go contrarian long on lows, largely because I'm going to look for reversion. That's really it. I'm going to look for some reversion moves today. This can get beaten up a little bit after the EPS and Home Depot, but the Walmart numbers give me a little bit of hope. EOG, there is an energy chop here. I am actually going to be back looking at the XLE as another short relatively soon. We're seeing volume pick up. I want to just see if we can get this MFI back up to where we can short virtually all of the EMP space once again. Energy looking a little bit weaker. Got a little bit of a pop on crude today, but those infrastructure numbers not good, or inventory numbers not good. And Kava, which is a name that has popped up quite a bit recently on this side. Kava Group, cyclicals, consumer restaurants. Look, rates aren't coming down. I would like to see this stock come out of oversold. This feels like a Bierman stock. This feels like a Bierman long. Next, and actually, I will state this. I wouldn't be shocked if this just stays like this for a while. Does another one of these for a month, month and a half, does nothing, consolidates, maybe chops, maybe a move back up to a key moving average, but there's not a whole lot going on there. This might be a stock to sell spreads on up into the upper zone. Key stocks of the day on reversions and bouncing: Walmart, Nvidia, Riot. RXRX is back in the fold. RXRX trading in a lot of direction with Mr. With the CEO of Nvidia. A little bit of a contrarian bid. Yeah, I kind of like this right now. We've seen a lot of movement on biotech, and if Nvidia gets a bid, I might not have much of a problem trying to ride this back up to, where were we? We had a number. It was on our daily. Forgive me. 511. Just trading the stock, coming off the lows of April and looking for a sympathy trade today with Nvidia. Riot, Nvidia, Walmart, reversion, setting things up with key volume weighted average price levels. We'll go from there. All right. Cool. All right. 921, that means Don's going to come in and play the Red Hot Chili Peppers. Maybe not Van Halen. I will be back later today. We're going to be focusing, obviously, on NVIDIA and some of these other names as well. It's going to be a very active 48 hours for me, which I'm excited about. Thank you, Charlie, for getting up, getting out of bed 10 minutes late today, Charlie. I appreciate it for coming and joining us today. 921, Don's coming up at the moment. Again, keep a very close eye on volume weighted average price and those anchored levels that we talked about. I will be doing the close today, 3 o'clock to 4 o'clock. I hope you all have a great trading day. We will catch up in a little bit. Take care.